Here out from Thomas Cook India, which has signed a pact to acquire the brand IP assets of Thomas Cook for perpetuity in India, Sri Lanka, Mauritius from the Thomas Cook Group. Here's an exclusive chat with Nikunj.
We signed an agreement last night with the liquidators of Thomas Cook UK to purchase the brand, the logos, the trademarks and the domains of Thomas Cook in India, Mauritius and Sri Lanka in perpetuity. Under a 2012 agreement at the time when Thomas Cook sold us to Fairfax Financial Holdings, we had signed a brand license agreement which essentially required us to pay approximately 2 crores a year till the end of 2024 when this brand license agreement would cease to exist. Now, this new acquisition of rights will supersede that agreement and we will hold the rights to the brand in perpetuity.
In the liquidation process, I'm sure, knowing Thomas Cook and the fact that you're a smart negotiator, I'm sure you must have got a steal deal.
Well, I would say that we got a good deal with the rationale of which was justifiable, because between now and the end of 2024, we would have paid approximately 10 crores as brand license fees, whereas we have now, for paying 14 crores, we have got the use of the brand in perpetuity. In my opinion, this works out extremely well for us for two simple reasons, Nikunj. The awareness and recall of the Thomas Cook brand that has existed in India for the last 138 years is very strong. And there is the belief that while it throws open many options to us as to how we can use the brand going forward. Lastly, if we did not acquire the brand, we essentially could mean that somebody would try to enter this market post 2024 using that brand. So this was essentially the rationale that we used in acquiring the rights to the brand.
Thomas Cook India customers have had no problems when Thomas Cook Global went bankrupt. But for your inbound tourist, Thomas Cook Global has not been a very pleasant experience. So acquiring a brand which globally has gone bankrupt, do you think this is not going to help your inbound tourism or inbound tourist business?
Firstly, the brand name Thomas Cook will only be used in our B2C business, which is essentially the foreign exchange and the outbound business that is domiciled within Thomas Cook India. As far as the inbound business is concerned, both in India and other countries, we use a variety of brands. For example, in India, we use a brand called Sita. In Asia, we use a brand called Asian Trails. In the Middle East, we use a brand called Desert Adventures. So we don't use Thomas Cook for the Thomas Cook brand in any of our inbound businesses, and we don't intend to going forward.
Walk us through the business environment. 2019 has not been a great year for Thomas Cook. There have been one-offs which have impacted your business. Jet Airways, problems in Sri Lanka, slowdown in consumer spending. How are things looking for this festival season or this holiday season?
Okay. First of all, Nikunj, I think 2019 definitely has not been a great year. And the biggest impact that we have felt, even more than the failure of Thomas Cook, has been the collapse of Cox & Kings. This has resulted in a fair amount of distrust of the industry from the consumer, and as a result of which we have seen bookings slow down. Which, however, looking at the current season and going into 2020, we're actually seeing some amount of revival in the bookings, but very honestly, for summer 2020, it's a bit too early to tell. January, February will be clear indicators of how the bookings will flow in, but we are fairly confident that we will recoup some of the lost ground and strive to actually beat our real numbers for last year.
When a large player in any market shuts down, the existing player always tends to gain market share. But what has happened is that you've lost growth because of the Cox & King problems. But the way I would imagine the situation will pan out is that you should ideally gain back what you've lost and also gain from the market share of Cox and Kings. When do you think that will happen?
You're absolutely right, Nikunj. We believe that we will witness both these trends in in summer of 2020. We will see demand flow back into the market. We will also see the market share of Cox and Kings reappear in the market in some form or the other. My expectation is that summer of 2020 will be good, and it's obviously based on early trends in our own bookings, as well as the feedback that we're getting from customers. The trend we've seen so far is a short-term trend, and the timing of the collapse of Cox and Kings actually came in a low season. So we wouldn't have seen much of an impact as far as the Cox and Kings customers were concerned. But what we did see, the impact was this entire distrust, because Cox and Kings customers who had paid suddenly were left without a holiday in their hands, and this sort of created some amount of dissonance in the market.
Let's talk about Thomas Cook and how Thomas Cook will look like in 2020 and in FY21. I'm assuming the restructuring would be done and Thomas Cook will be trading independently of Quess. So walk us through the process for the benefit of our viewers now that you've got the NCLT approvals in place.
So the NCLT approvals are in place, and we have now determined the record date for this transfer of shares from Thomas Cook to its shareholders as December 6th. The ratio obviously is 18.89 shares of Quess for every 100 shares of Thomas Cook. This process will be complete, after which the structure of Thomas Cook will look a lot simpler, because we have also undertaken a degree of restructuring within the Thomas Cook Group, whereby we have moved all our fixed assets and all the brands from the subsidiary companies into Thomas Cook. We have also moved the ownership of a second level step down that we had created through the acquisition, through various acquisitions. All that is being cleaned up. So what you're now going to see is the Thomas Cook Group with a whole lot of subsidiary companies which are one step down. And that's it, and all the ownership will vest with Thomas Cook India. So from a stock market point of view, I believe this will clarify a lot of things. It'll be far easier to decipher, especially with the exit of Quess from our numbers.
So what is the right way of looking at Thomas Cook? A company which has incubated a lot of businesses, or a company which has subsidiaries but it is still a pure play on travel?
So Thomas Cook is essentially a play on travel with a whole lot of outbound tour operating businesses, corporate related businesses like incentives, as well as corporate travel management, foreign exchange related to travel, and the inbound business. Additionally, we've got two businesses which are adjoining and are related to the travel industry, one being Sterling Holiday Resorts and the other being DEI, which essentially services photography in tourist locations around the world. So I would now call us an integrated travel and travel services company with the exclusion of Quess.
Mr. Menon, globally, travel companies have now become platform companies, and they are getting incubated by PE funding and by cheap global liquidity. How do you plan to compete in this kind of an environment?
Nikunj, as far as the outbound businesses are concerned, as you're aware, today nearly 30% of all the package holidays that we sell are online, and we expect that this to grow as we go forward. We are also introducing a lot of technology that will enable us to compete with the so-called platforms that you refer to. As far as our other businesses, global businesses are concerned, they're in the B2B space. And here also we are introducing new technology which will enable the aggregator based in source markets to directly source prices, packages, hotel rooms from our existing destination management companies seamlessly online. So, we are gearing ourselves up to compete with all the various platforms that exist. Having said that, what we have witnessed in the outbound business is that the online tour operators, while they sell components, are trying to sell some of the packaged holidays that we sell. And we believe that that is our core strength, and we are far better equipped to actually compete with them in that space.
If I have to talk about 2020, in your own words, are you reasonably confident of a business revival, or you're cautiously optimistic?
So, Nikunj, my experience is in running businesses, and I am optimistic. And this is based on several factors. I believe that the slowdown, most of the worst news on the slowdown is already over, and that people are beginning to see green shoots at the other end. Secondly, the collapse of a large competitor is going to result in business coming back, their business coming back into the market. So my expectation is that 2020 will be a good year. My expectation is that 2021, financial year 2021, will be better than the financial year 1920. And, we are looking forward to the year. We are gearing up in every possible form to ensure that our tour operating business out of India under both SOTC and Thomas Cook are ready for the season. As far as our inbound businesses around the world are concerned, it's a B2B business, and my expectation is that we will see a stable environment in those businesses also. As far as DEI is concerned, they have several new contracts that are coming in during 2020, 2021, and my expectation is that we will see their revenues also increase. Lastly, Sterling, throwing up operating profits, I expect them to continue improving as we go forward.